Alright, hello, morning, welcome to another weekly outlook video. In this video, as we do every week, I will be outlining what I wish to see from some currency pairs, from the majors to exotics and anything else in between, like the indices and commodities. But in this video, we will start off with the dollar index and then work our way down. So of course, here on this chart we can see this is the dollar index daily chart, and we have the IPDA data range for the previous month. Since it's a new month now and NFP has already happened, we will try to redo the IPDA data range for the month of June. For those that don't know how I pick out or how I draw out my IPDA data range levels, please check out the video that I'll probably link in the description or somewhere up here. And yeah, I'm going to do this for the month of June in front of you guys, but I'll speed it up a bit and not bore you with the process. So let's begin. Alright, so this is the IPDA data range for the month of June. That's the opening price for the month, the first business day of this month of June. And we can see that the month opened up and took the previous data low. Well, I can't say data, but yeah, the IPDA data, the 20 days look back low, which we can see there. We swept the lows and then we created a swing low at this point. The next thing that I can see that we've done is to disrespect this sell side imbalance. I know many might not be able to see it, but it's right there. There's a tiny inefficiency right there between this candlestick's low and that candlestick's high. The gap that we have in between there is a fair value gap. In this case, it's a bearish fair value gap, and you can see price was supporting for lower movement here and here because we didn't close above it. And now after NFP came out, we were able to displace above it and disrespect it completely. The second more important fair value gap that I'm paying attention to is this CB right here, which is the biggest one and probably the only one actually visible from this daily time frame within the 20 days look back. This is literally the only fair value gap that I can see. There's probably smaller ones up there somewhere, but the only significant one I see is here. And when we pull this out in time, we can see that this has been now disrespected as well. Monday's candle, which was printed yesterday, has closed above this inefficiency, so we might see this area act as some sort of support for higher prices. This inversion fair value gap now, because it has been disrespected, it's no longer a CB, it's now an inversion fair value gap. So my draw on liquidity for the dollar index would be the 20 days high, 40 days high, and then of course the external range liquidity levels that we have up there, the relative equal highs. And yeah, I'm still bullish on the dollar. I know I've been bullish from way up here. I was waiting for a discount to retracement, which we did over there, and then we just sort of consolidated the whole month. So I'm looking to see if this month will be the one to push us higher. I do expect price to tap the EQ level, the opening price of this month, before continuing higher though. That would be my optimum entry for us to retrace all the way down to the EQ, which is the equilibrium. or the opening price of the month before continuing higher. But of course, as I said, this is just my preference, and I will set an alert there because we have I know we have FOMC on Wednesday. I'm not sure what else we do have, but I know we have high impact news events on Wednesday that might create the low of the week somewhere inside of this BC, between this candlestick's high and that candlestick's low. So inside of here, we might get a retracement, then a continuation higher. And specifically, I would like to see the opening price of the month being tagged before continuing higher. So that's my expectations for the month. If I could buy the dollar directly, I would have put my entry there and my stop loss at the low of NFP, targeting the external range liquidity levels up there. So I would have had a 4-to-1 setup. So that looks something like this. And yeah, of course, wait for the retracement here, then continue higher. But this is just my opinion and not something that should be taken at heart. It's just what I see on the market and how I interpret the charts. So that's my outlook on the dollar. Of course, that would mean the opposite for EURUSD and GBPUSD. I obviously don't have the IPDA data range for these as well, but I would be looking for some sort of retracement up into this premium fair value gap before a continuation lower, targeting the sell side liquidity levels all the way down there, and of course the external range liquidity all the way down there with the relative equal lows. So I'm looking for a retracement. The nice thing about this fair value gap is that it sort of aligns with this breaker right there. We got a high that swept liquidity down there at the lows, and then a new high before displacing lower. So I usually take this lowest candle, but sometimes I'll take the bearish one before the bullish move up. So either way, I would say focus on this area, which is together with the fair value gap anyway. So I'll say watch to see for a possible retracement into this fair value gap, then a continuation lower. That's my expectation on euro dollar, lower prices from this fair value gap. The same goes with GBPUSD. I know I also have the previous IPDA data range for GBP here as well, but the same concept. We got a sweeping liquidity at the highs up there, a turtle soup if you want to call it that. We got a displacement, and we don't have a daily market structure shift yet because we haven't closed below any swing lows. We displaced below this swing low, but we didn't close below it. But if this was closed below, if this swing low was violated, then I would have been looking for a possible entry from this fair value gap, pushing lower, and possibly even the previous up close candle before the move lower, which is that order block. So yeah, that's what I'll be looking for in GBPUSD, lower prices, and I will do the IPDA data range after this video for GBPUSD. So on our next video, which is going to be after FOMC, we will see how this has unfolded and what we are expecting moving forward. But this is on GBPUSD. So those are the majors. I'm not going to worry much about NZDJPY and AUDJPY because they are more or less the same or similar structure. The next on my focus are the yen pairs. The reason behind this is because when we look at the yen basket, this is basically the yen combined with every pair out there, right? Well, majority of the pairs out there. When we look at it, we can see from the weekly chart that we are clearly going for this sell side liquidity. We have that sell side liquidity level right there, and what we have done is to trade back into this internal range liquidity. So that's a fair value gap, a CB, and I'm expecting us to basically move from internal range liquidity to external range liquidity, something like that. So I'm expecting this sell side liquidity to be next, and because of this, it means I'm expecting the opposite on all yen crosses. Let's start off with AUDJPY. When we look at the weekly chart, we can see that we've traded into this internal range liquidity here as well, which also is coupled with an order block, a bullish order block, which is this previous down close candle. And what do we have residing above price? We have that swing high that we haven't reached yet. So we are looking for a possible sweep of that buy side liquidity because we have tapped in a weekly fair value gap, what do we look for? We look for time frame alignment, which is basically a 4-hour confirmation. On the 4-hour chart, we already got a confirmation. Actually, okay, let me clear this up. It was an arrow that I was predicting how price was going to play out, and we actually played out exactly like that. On the 4-hour chart, we got we traded into it here, displaced away, accumulated, and now I'm believing this is a manipulation lower into a discounted fair value gap, which is right there, right? So we traded away from this, we reacted away from this weekly fair value gap, and then accumulated. Now I'm expecting this to be an accumulation, manipulation, and distribution. So now that we've chopped around, manipulated, yesterday actually gave us an entry right here, which I shared on my private group. I don't really have that group left open to the public, but I did share this entry on the group. I'm expecting the external range liquidity up there to be tagged next. And right now, for those that missed this entry, I would be focusing on the second 4-hour fair value gap that's been created, and possibly this bullish order block. So I'm expecting price to retrace back down into one of these PDRAs, then a continuation higher. And my invalidation point being this swing low. I wouldn't like to see price come back down to the swing low or the consequent encroachment of the weekly fair value gap, which is this huge purple area. So I'm expecting a retracement and a continuation higher on AUDJPY. The same apply, or similar concept apply with CAD JPY, but CAD, you can see, is a lot more weaker than the rest. And EURJPY, literally the exact same thing, because on EURJPY we have the same fair value gap right there, we have the same swing high right there, and we would wait for a 4-hour confirmation. On the 4-hour chart, we did trade away from the fair value gap there, and now we came back down again. And let's see if we have an SMT with GJ. No, we don't have an SMT. It's literally the exact same thing. So I'm expecting a continuation higher from here. We can possibly wait for a market structure shift, meaning a swing high that is broken, preferably by a fair value gap. This swing high could be the one, or we could create some sort of swing high here. We could create some sort of swing high right here, and if that swing high has a fair value gap with it, this would be a possible entry for higher prices. It doesn't have to be this swing high, it can be any swing high that's created right now. So I'm looking for this possibility on EURJPY. The same applies with GBPJPY. The thing is, with GBPJPY, GBP as a currency in general is a lot more stronger than the rest at the moment, and we can see that we've actually cleared the buy side liquidity that we're targeting on the rest. So right now the external range liquidity would be this swing high instead. We've traded away from this discounted fair value gap and rejected aggressively away. We didn't even reach the consequent encroachment, we just traded aggressively away. On the 4-hour chart, we can see that we've already started the move, and all we did in this previous session was to trade down to this other block, and now we're continuing higher. So from here, I don't expect GJ to actually trade any lower. I expect a continuation up. From here, I'll be watching levels like that, and yeah, I don't think we're going to trade down into any discount from here. I just expect a continuation higher. The same goes with NJ and other pairs, but I'm not going to bore you with the same repetition. Internal to external, but internal here was not even reached, so I wouldn't even bother myself with NJ. I would consider UJ, because on USDJPY, let's remove these previous illustrations. On USDJPY, yes, we don't have a weekly fair value gap right here, but it perfectly aligns on the 4-hour chart, because I like the fact, let's actually highlight the external range liquidity that we were looking at, which is that swing high there. On the 4-hour chart, we during NFP we had an SMT divergence with the dollar index at the lows over there. So this is my primary reason for wanting to actually trade USDJPY. The second reason is that we have this equal body candles here. I'll be paying attention to that as the last down close candle as an order block or a breaker, because we technically swept a swing low there. So I'm looking to see if price can retrace down into this last down close candle before continuing higher. And yeah, this is basically going to look more or less like my setup with the dollar index. If I could trade the dollar index directly, I'll be looking for something like this, aiming for a possible 4-to-1 risk reward, because I don't believe we'll stop exactly at the high, and I think we'll continue higher than the all-time high. So this is my expectation on UJ and the majors. Of course, I've covered all the other yen pairs as well. The other thing that I'm looking at this this month is gold and a few other commodities. Actually, I'm looking at gold from the weekly time frame. It looks to be building and setting up a possible 2022 model. The reason I say this is because at the highs there we swept the all-time highs. So we swooped the all-time highs, and now we have a swing low that I would like to see if we could disrespect it by closing below it. When price closes below it, we could look for a possible retracement and then a continuation lower. Of course, we have so many sell side targets to aim for. For example, measuring the range from here to here. The recent swing point is this one, and that's the last swing high. Measuring the range, we can see that we're already in discount right now, but if you measure the main range from the low down there, we have discounted price here, right? So we could look for this down close candle to be the next target and possibly the swing low after it. So we have so many sell side liquidity levels to be aiming for, and at that point this would also be a breaker that we could retrace back into before continuing lower. Of course, we might not have any fair value gap, but that's fine. So this is something to look out for in the next few weeks, because this is a weekly time frame. Silver isn't as clean as gold looks right now, so I'm not going to worry myself too much on silver. And yeah, that's my expectations for the week. I do have I did get some requests actually on indices to cover, but I haven't looked at them before, so this will be my first time ever looking at them and giving my expectations on them as well. Alright, so I haven't actually seen any of these charts, but I'm assuming these are the options. Synex, well, S&P, BSE, and then we have Bank Nifty and Nifty 50. I hope these are the charts. So let's see. On the starting off with the higher time frame that I prefer, the monthly chart, we are currently at the all-time highs, as we can see. So the first thing that comes to mind is never try to be the one stopping a freight train while it's moving. So because we're at the all-time highs, I'll be looking for higher prices. I'll be looking for a continuation until bullish price action starts failing. So for example, on the monthly time frame, we have this inefficiency. We can look for a possibility of price trading down into it, then a continuation higher. So we will get some sort of internal range liquidity out to external range liquidity, something that looks like that whenever the swing high is created. So we can look for a possible retracement down into this before a continuation. On the monthly time frame, weekly time frame, we can see that last week was just a massively manipulated week. So let's see if price can come down into this liquidity void and volume imbalance, but primarily the liquidity void, the empty space in between. We could see price retrace down all the way to this inefficiency before trickling higher into the external range liquidity. So we can look for something like that, a retracement down into this liquidity void right there. On the daily time frame, I don't see much but more inefficiencies, because this is not a daily traded I said from what it looks like, from what I'm seeing. So let's see if price can come down into this inefficiency from the weekly and monthly time frame, then continue higher from there. And now we move on to Bank Nifty. Starting from the monthly chart again, we are currently at the all-time high as well, so don't try to be the one to stop it, and rather look for a continuation higher. We can see already here that we are respecting this bearish candle. We closed above it when this candle closed, so that makes it a bullish order block. When price closed above it, now comes back down into it and is somewhat using it for higher prices. We can expect that buy side liquidity to be cleared next. On the weekly time frame, we seem to have had a manipulation lower, clearing this swing low, the sell side liquidity. This could be a possible turtle soup, so I can look to see if price can continue higher from here, from this volume imbalance, because it's coupled with the order block. Even though the order block was already disrespected by this candle, price may retrace down into it and use it for higher prices. Let's see, the week just opened now, so yeah, I don't have much else on the daily. I'd rather just stick to the weekly, so we can look for a possible retracement down into this, then a continuation higher to new highs. Then we have Nifty 50, which is more or less the same as the other charts. Starting again with the monthly, we can see the same fair value gap here. So yeah, I'll be looking for the same thing, a retracement into the discounted price levels there, a liquidity void, then a continuation higher from these areas. That's what I'm looking for. Yeah, I hope these were the right charts, because I wasn't given the trading view code for them. But if it's not, the person that requested for it, please do correct me in the comment section or on Telegram. But yeah, I'm open to looking at any charts that you'd all like me to check. So yeah, I'm looking for higher prices on these, on basically all of them actually. And yeah, since that's all for now, I will say stay safe, good luck, and good trading.